I'm Mark Jernigan. This is Nick Sutton. Imagine a letter arrives from the IRS. You might have to sign for it. You open the letter, and the IRS says you owe an astronomical amount of money. When you call my office, the one thing you're going to want to know is, how can I possibly owe this much money? There'll be disbelief in your voice. There's just no way. You can't owe this much money, and there's no possible way that you can ever pay it off. Well, to understand how it got to be this much, let's examine the components. There's base tax, plus penalties, plus interest, equals a huge amount of money that you cannot repay. If you haven't filed your taxes in several years, and you haven't paid the base tax that you owe, there are two penalties that are hitting you right away: failure to file and failure to pay. Each of these penalties takes the base tax that you owed and increases that amount by 25%. So if you haven't filed and you owe taxes, the IRS increases the balance by 50% right away, and then they start adding on interest.
If the IRS has not received a response for the request for "where is your tax return," the service will eventually prepare a return for you. They call this return a substitute for a return. These returns are egregious. These returns are filed in the best interest of the service, not of the taxpayer. The service will take the income reported from the 1099s as sales and offset nothing for expenses, so the amount of tax is severely inflated. Then the penalties are larger and the interest is larger, and so on and so forth, because the inflated base tax. Delinquent filing for independent contractors are usually affected the most. For example, an independent contractor that made $50,000 wonders why he owes $25,000 for that year, 50% of his income. We talk to people like this all too often. The contractor has 13–15% for self-employment tax, 25% for federal income tax. Put on penalties, interest, bam! The client owes $25,000 per year.